If you look at your trading screen in New York right now, you will see the price of silver hovering around $75. But if you were to book a flight to Shanghai and walk onto the floor of the Shanghai Gold Exchange, SGE, you would see a price that is nearly $14 higher. As of this morning, silver in China is changing hands at the equivalent of $89 per ounce. This is not a glitch. This is not a rounding error. This is the smoking gun of a broken financial system. We are witnessing the bifurcation of the global economy. The West is trading paper silver, a digital promise that is infinite and manipulated. The East is trading physical silver, a strategic metal that is finite and essential. The US price is a lie designed to keep you calm. The China price is the truth designed to drain the vaults. And right now, the truth is winning. To understand the gravity of this situation, you must understand the concept of arbitrage. In a free market, prices equalize. If silver is cheap in New York and expensive in Shanghai, traders will buy in New York, ship it to Shanghai, and sell it for a risk-free profit. This is exactly what is happening, but on an industrial scale. Massive bullion banks and Chinese state-owned enterprises are buying every available ounce on the COMEX at the suppressed price of $75 and immediately exporting it to the East. This price gap acts as a giant vacuum cleaner. The US banks, by suppressing the price to save the dollar, are inadvertently subsidizing China's accumulation of strategic reserves. They are selling the family jewels for pennies on the dollar to our greatest geopolitical rival. This arbitrage trade is having a devastating effect on Western inventory. The registered silver at the COMEX, the metal available for immediate delivery, has collapsed to historic lows. We are seeing a daily outflow of metal that is mathematically unsustainable. The vaults in New York and London are being hollowed out. When you see the price drop on your screen, do not be afraid, be angry. That price drop is artificial. It is a discount coupon for China. Every time the price dips in the US, the volume of physical metal leaving for Asia spikes. We are watching the liquidation of American wealth in real time, facilitated by a rigged pricing mechanism that no longer reflects reality. Why is China willing to pay nearly $90 for silver when the spot price is $75? Because they know the true value of the metal. China is the world's manufacturing hub. They produce the vast majority of the world's solar panels, electronics, and electric vehicles. They know that without silver, their economy stops. They are not buying silver to speculate on a chart. They are buying it to feed their factories. They see the supply cliff coming in 2026. They know that mining production is falling. By paying a premium today, they are securing their industrial future. They are paying the real price, while the West plays games with paper derivatives. The commodity exchange, COMEX, in New York was designed to be a price discovery mechanism. It has failed. It has become a price suppression mechanism. When the price of a commodity on the exchange is significantly lower than the price in the real world, the exchange becomes irrelevant. We are approaching a moment where the COMEX will be bypassed entirely. Miners will stop selling their metal to New York. Why would they? Why sell for $75 when Shanghai pays $89? We are seeing the early signs of miners withholding supply from the West and signing direct offtake agreements with Eastern buyers. When the producers leave the exchange, the COMEX contract becomes a ghost, a piece of paper representing nothing. You don't have to go to China to see the fake price. Go to your local coin shop. Go to an online dealer. Try to buy a silver eagle for $75. You can't. The premiums in the US have exploded to match the China price. If the spot is $75, but the cheapest coin you can buy is $90, then the spot price is a lie. The street price in America has already aligned with the Shanghai price. The only people who still believe silver is $75 are the ones trading paper contracts on Wall Street. The physical market has already repriced. The disconnect between the screen and the street is the final warning sign of a currency collapse. China has strategically lowered import duties and VAT on precious metals to encourage this inflow. Meanwhile, the West charges taxes and premiums. This is policy warfare. China is weaponizing its trade surplus. They are using the trillions of US dollars they hold, dollars they know are being inflated away, to buy hard assets. They are effectively dumping our debt back onto us and taking our resources in exchange. It is the perfect economic crime. They get the silver, we get the inflation, and the suppression of the price by US banks is the very tool allowing them to do it. This price gap is creating a crisis for Western tech companies. Tesla competes with BYD, the Chinese EV giant. If BYD has access to silver stockpiles in Shanghai and Tesla has to rely on a broken COMEX market, Tesla is at a disadvantage. We believe that major Western industrial users are quietly panic buying behind the scenes. They are realizing that if they don't pay the China price, they won't get the metal. This shadow bidding war is driving the real price higher, even if the manipulated futures market doesn't show it yet. The industrial user cannot print silver. They must buy it, and they will pay whatever is necessary. This entire operation has accelerated during Ghost Week, the holiday period. While Western regulators and traders were on vacation, the East was working. The volumes on the SGE have hit record highs this week. They used the low liquidity in the West to absorb massive amounts of metal without spiking the global spot price too quickly. It was a stealth raid. By the time Wall Street returns to full capacity in January, they will find the cupboards bare. The ghost was China, and they cleaned us out while we were sleeping. With the arbitrage window wide open, the risk of a delivery default in New York is at a code red level. If a major entity stands for delivery on the COMEX today, the exchange will likely have to scramble to find the metal. They might have to cash settle, force the buyer to take dollars instead of silver. This is a default in everything but name. If this happens, the confidence in the US dollar system evaporates. If you buy a contract for silver and they give you paper, the contract is a fraud. We are days or weeks away from this realization hitting the mainstream. This silver drain is a microcosm of a larger geopolitical shift. For 50 years, the US dollar determined the price of everything: oil, gold, silver, grain. But now the pricing power is shifting east. If Shanghai sets the price of silver and Shanghai trades in yuan, then the yuan becomes the de facto pricing currency for the metal. This undermines the dollar's status as the global reserve currency. We are watching the financial center of gravity shift from New York to Shanghai in real time, driven by the laws of supply and demand. JP Morgan is trapped in the middle of this. They are short silver in New York. As the price rises in Shanghai, arbitrageurs buy in New York, pushing the price up, to sell in China. This buying pressure forces JP Morgan to short more to keep the price down, digging a deeper hole. They are fighting the entire Chinese economy. It is a battle they cannot win. Eventually, they will be overrun. When they capitulate and cover their shorts, the price in New York will snap up to match Shanghai instantly. That snapback will be the most violent price move in history. The banks want you to think silver is cheap, so you don't buy it. They want you to think it's a dead asset, but China thinks it is cheap for a different reason. They see it as a bargain strategic reserve. You need to adopt the Chinese mindset. $75 is not expensive. It is a gift. $89 is not expensive. It is a discount. In a world where they are printing trillions of dollars, any finite asset under 3 digits is a steal. The Chinese are not stupid. They are opportunistic. They're buying the dip that the US banks engineered. Looking ahead to 2026, this drain ensures a supply cliff. With Western vaults empty and production stagnating, where will the silver come from next year? It won't come from China. They have banned the export of silver bullion. It won't come from Russia. The West will be starved of metal. This will lead to resource nationalism, where countries like Mexico and Peru might nationalize their mines to keep the silver for themselves. The era of free-flowing global commodities is ending. The walls are going up. This market is shaking out the paper hands and the speculators who get scared by a $2 drop in the spot price. Meanwhile, the diamond hands, the physical stackers and the Chinese state are accumulating. Wealth is moving from the impatient to the patient, from the believers in debt to the believers in assets. If you sell your silver now because the chart looks scary, you are handing your wealth to Beijing. You are falling for the trap. Gold is telling the same story. The Shanghai premium on gold is also high, but silver is the volatile younger brother. Because the silver market is so small, the arbitrage effect is more violent. A few $1 billion moving from New York to Shanghai can drain the silver market in a week. It takes much more to drain the gold market. Silver is the weak link in the chain. It is the asset that will break the banking suppression first. Where's the CFTC, Commodity Futures Trading Commission? Why are they not investigating this massive price disparity? Because they are captured regulators. They work for the banks, not the people. Admitting that the price is fake would be admitting that they failed to oversee the market. Their silence is complicity. They will ignore the arbitrage until the system breaks, and then they will blame speculators or foreign actors. Do not expect the government to save you. Expect them to cover up the crime. Mathematical law states that the gap must close. Either the Shanghai price drops, unlikely given the demand, or the New York price rises. We predict a revaluation event. The COMEX will open one morning and gap up $15 to match Shanghai. It will happen overnight. You won't have time to buy. The fake price will be deleted, and the real price will take its place. Anyone holding a short position when this happens will be wiped out instantly. Knowing that the US price is fake gives you an advantage. It allows you to buy an asset at a discount to its real-world value. Every ounce you